In this video, traders, let's talk about what is a market rotation. Stick around. Hey guys, warm welcome to you. Thanks so much for joining me. Okay, 5 or 6 minutes of your time to discuss this. What is a market rotation? Now, you may well have heard of traders talking about this a lot, and it's kind of, I think it really stems from futures traders, especially those guys who are trading in the pit. It's kind of an old school terminology thing, and it really is the description of how the market oscillates in an intraday basis. So imagine it's an intraday chart, okay, 5-minute chart, 50-minute chart, whatever it is. And you know, when you're a trader, you know this, markets kind of push to highs, push to lows, they kind of pulse up and down in like a wave format, sometimes in a range, sometimes they kind of push into highs in that wave format, sometimes they push into lows in that wave format, and every now and then you get that persistency of trend, you very hardly get any waves at all. So you can just see this. So imagine if you're kind of in a sideways market, you'd be looking like this. If you're kind of pushing up, it'd be looking like that. If you're pushing down, it'd be looking like that. Sometimes you get these just trend days that just do that. Okay, so what's the rotation? The rotation tends to be, that's not the best color for that, is let me select a purple color. The rotation tends to be the movement between high and low within that structure. So we've got these kind of waves, whether we're sitting in a range bound environment, whether we're kind of trading up in a channel or down in a channel. We don't have them if we're in a persistency of trend, but a rotation is basically the miniature trend within the trend, if that makes sense. So we're not really talking secondary trend or tertiary trends here. We're more talking about, hey, how far does the market go from low to high before it does something else? So I'm a big fan of this, and it has helped my trading no end to think of the market in terms of kind of different structures and phases. So market kind of pushes to highs, that's phase 1, and then maybe it sits in a channel, that'd be phase 2, then maybe it kind of draws down a little bit, it's phase 3, then we have breakout. And so often it's not clear enough that you can just kind of draw a line, but very often it helps me think anyway and say like, okay, the market's in a kind of volatility expansion phase, intraday. Okay, I'm not on that trade. Let me wait until the next phase comes in, and then I'll position or look to position for that. So that chunking of phases helps you break up. You might get many of those in a day. You might get 2. You might get kind of a trend up or kind of sitting in a range for a while, then it breaks out for afternoon breakout. There's 2 distinct phases there. So this is kind of really where it comes from, this rotation thing of, okay, what are the rotations? And there's no scientific way to do this, unlike distance from moving average, which is a quantifiable number, or Bollinger Band width, or stochastic reading, or whatever it may be. This is more eyeball. And so you would say, okay, what's the rotations of this market? And very often a trader would say, okay, the rotation is here to here. What is that? Okay, let's say it's 3 ES points, right? 3 S&P 500 points. Then the rotation will be 3 points. And then again, maybe if it rotates back down to here, and someone measure that and say, oh, that's 3 points as well. Okay, we're in a 3-point rotation. This one's from here to here is 5 points. Okay, now we're expanding because that's 4 points. So I know that I'm using different values here, but the idea is you're measuring these here. What is the rotation? And some people say, okay, what's that rotation? Now that would be a rotation. So it's from high to low before something else happens. It's the kind of rhythm that appears within a broader trend or within the intraday chart. Now, why is that important? Because that's generally what pit traders would try to capture. I'm generalizing a bit here. I've never been in the pit myself, but I do know traders who used to do that. They would say, right, we are trying to capture this pulse, this wave, and the rotation of the market, the rhythm of the market, the broader rotation is almost regardless of where that market ends up. If that's a really nice wide rotation range bound, they'll be buying at lows, trying to sell at highs, trying to get short highs, or maybe missing out that leg and coming back in at lows, etc. They'll be looking for these rotations. They generally wouldn't be trying to hold from here all the way to the end of the day. Now, some would, of course, I'm generalizing, but you get the idea. They're trying to find that short-term supply and demand wave, feeling the wave, feeling the structure, and judging it, saying, hey, we're in these kind of 3 to 4 point rotations. Okay, if I can buy 1 point off the low, I can hold for 2 points. That's going to be the end of that rotation. Wait for it to roll back again. And then they don't care about direction. They're just looking to get with the rhythm. They don't care if the tide is rising or falling. All they care about is the waves. Okay, you can imagine if you were just kind of watching at the shoreline, like, hey, okay, the tide's coming out or coming in, I can just watch these waves and the rhythm of the waves. Oh, we kind of get 3 or 4 in a row, then we're going to maybe get a big one, then we this, and you kind of judge and you see, right? And so this is the same thing as if you're an intraday trader, It doesn't have to be futures, of course. You can get in tune with the rotations, and when we talk about rotations, it's like, hey, the market's rotating between these levels. It's this kind of ATR, this kind of distance, and it helps you structure as well your trade, because you might say, right, hey, I want to get long. I'm looking for a breakout here. Well, if the market's been rotating in 3 points and you're going long after it's up 2.5 points from the low, you're expecting that to suddenly break out, or you got to sit through a rotation lower, even if it is in kind of one of these rising up channels. So you can structure your trade and go, actually, you know what, I do want to get long, but I'm going to wait for at least a 2.5 point rotation off the current swing high, wherever that may be. And it might not even be anything significant. It might just be, you know, a swing high in the middle of nowhere, rotating lower. You might say, okay, that's the position for me to try and get long for a rotation higher, and then I can hold it potentially for a breakout, maybe get a little bit more of an extension, 4-point rotation and stuff. So thinking in terms of these rotations and waves helps you align with the market structure a lot more. Like I say, there's no official, or maybe there is, you guys can tell me, there might be an official definition somewhere that I completely missed, but as far as I'm aware, the rotation isn't an official form of measurement. It's just you eyeballing a chart and kind of saying, yeah, look, we're in these kind of $2 rotations, $4 rotations, 50 pip rotations if you're trading currency pairs. Hope this helps. See you next one. Take care. Bye-bye.